The world will shake from America's recession. Will India survive this economic storm? In the darkness of night, while the entire world was fast asleep, a single piece of news shook the foundation of the world's largest economy. The United States, which has been the engine of the global economy for decades, is now heading towards a deep economic slowdown. And when America slows down, the impact isn't limited to Wall Street, it is felt in every corner of the globe. The same is happening this time. A sharp decline in consumer spending in the US has left investors, corporations, and governments sleepless. And this is just the beginning. The waves of this economic storm have already reached countries like India. The real question is, can India shield itself from the heat of this global recession? Today, we'll dive deep into this very topic. But before we begin, if you are new to our channel, don't forget to subscribe so you never miss an update from us. Now let's begin today's discussion without any delay. The US economy has always relied heavily on consumer spending. But when people begin to cut back on their expenses, it signals that instability has reached deep levels. In May 2025, consumer spending saw the sharpest decline since January. People are now limiting themselves to essential items instead of buying new TVs, cars, dining at expensive restaurants, or going on vacations. Especially in the service sector, demand has dropped so significantly that experts are calling it the weakest quarter since the pandemic. One of the major reasons behind this is the uncertainty created by the Trump administration's policies. People have no idea what will happen tomorrow. Will taxes rise or fall? Will their jobs remain or disappear? The US housing market is also caught in this slowdown. In May, sales of new homes dropped by 13.7%, the biggest decline in 3 years. Builders offered attractive deals and discounts, but still, buyers didn't show up. Why? Mortgage rates are hovering around 7%, construction material costs continue to rise, and there's a persistent labor shortage. This has pushed the dream of homeownership even further away for the average citizen. Now all eyes are on the US Central Bank, the Federal Reserve. The Fed has made it clear that it is in no hurry to cut interest rates. Federal Governors Christopher Waller and Michelle Bowman have stated that only if inflation remains under sustained control will they consider a rate cut in the July meeting. For now, they are waiting for more data to avoid any hasty decisions. This cautious approach shows that even the US itself is unsure about its economic future. Now let's turn to Europe. The economic environment there is already fragile. European companies are hesitant to invest due to America's policies and the ongoing wars in Ukraine and the Middle East. In June, private sector activity showed only marginal growth. Investments remain stalled and expansion plans are on hold. Yes, there is some positive news from Germany. Companies there are becoming slightly more optimistic as the government plans to increase public spending. But as long as American tariffs and geopolitical tensions persist, Europe's momentum will remain sluggish. The situation in the UK isn't much different. People there are shocked by the rising prices of everyday items. Essentials like butter, beef, and chocolate have seen price hikes of up to 20% compared to last year. This marks the biggest surge in food inflation since February 2024. As a result, the Bank of England is also hesitant to cut interest rates. Until inflation is brought under control, the British economy will continue to remain in a slowdown. Now, let's shift our focus to Asia, where China's situation is becoming a growing concern. In May, the profits of China's industrial companies fell by 9.1%, the steepest drop since October. US tariffs combined with domestic deflation fears have put Chinese firms on high alert. They are pulling back from new investments and hiring. And when companies turn cautious, it affects the entire economy. Japan's capital, Tokyo, tells a similar story. Apartment rents there have increased by 1.3%, the sharpest rise since 1994. This indicates that inflation is now beginning to affect everyday life in Japan. As a result, pressure is mounting on the Bank of Japan to alter its monetary policies. But how can it, when the rest of the world is going through an economic crisis? On the other hand, countries like Mexico have managed to stay afloat on the edge of recession. Their central bank has cut interest rates by 0.5%. However, they've made it clear that any further cuts will be minor. Mexico's situation is relatively stable, but the global pressure is being felt there as well. Now comes the biggest question: where does India stand amid all this global turmoil? India's current position is relatively better. Domestic demand remains strong. Retail markets are bustling, infrastructure projects are ongoing, and government policies are providing support to the economy. However, the slow demand from the US and Europe has started to impact India's exports. Sectors like textiles, gems and jewelry, and auto parts could be particularly affected. At the same time, China's economic slowdown has disrupted the global supply chain. India is experiencing delays in the supply of raw materials, which could impact production. However, the Indian government is now actively seeking alternative sources under the China Plus One policy, looking toward countries like Vietnam, Indonesia, and South Korea. Additionally, pressure is mounting on the Indian rupee. It has weakened against the US dollar, which could make imports more expensive. This may affect India's inflation rate, especially impacting the prices of oil and food items. The stock market has also become more volatile. Foreign investors have grown cautious. With the possibility of rising interest rates in the US, they may start withdrawing money from India. This could increase pressure on benchmark indices like the Sensex and Nifty. But behind every dark cloud lies a ray of hope. India has an opportunity if the government strengthens production-linked incentives, supports the MSME sector, and reduces dependence on imports. The country can not only survive this global recession but emerge stronger from it.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.